Today, we're discussing fintech, that fusion of finance and technology. Well, what form does it take, and what are the investment opportunities, and where is it going? Well, for more, we are joined by Derren Nathan. He is Director of Research at Hybridan and author of The Evolution of Fintech. So Derren, I've scanned this and it's worthy of a doctorate, and I thank you for using layman's terms. But it starts off with a caveat that Hybridan last wrote about fintech 7 years ago. So what's taken you so long?
Well, it may be that we're laymen as well, Sarah, and it takes a while to digest and catch up with events in this very fast-moving market. But I think we're at a point now where companies are coming out thick and fast. We're very much in the kind of startup era where a company can go from zero to hero in just a few years. And I think it's, I think technology has caught up with the desire to make finance easier and more accessible. So not just technology, actually, but regulation as well. So you have a lot more APIs out there that enable different providers, different apps to be able to integrate with each other a lot easier. So you don't need too much of your own legacy equipment and on-site servers, etc. You can do all this in the cloud. And then in the meantime, in the UK at least, we've had PSD2, the directive that has enabled open banking, and this has allowed, with consent, people to access data much quicker. So if you are using a fintech service for getting a mortgage, or for even opening a bank account or trading, you can be onboarded much quicker, and people can assess your financial position a lot quicker, or it might not be a person, actually, it might be a bot at the other end of that. But I think just everything is a little less clunkier than it was. There's a lot more funding interest in it now, and I think it's just a very exciting time for the industry.
So you're saying that people can be onboarded much quicker, there's much more access to personal data, but is it safer? Does fintech make provisions for safety?
I think you've always got to make sure that, I think regulators really need to be on top of this, and you need the safety providers to actually have these fail-safes in place. So I think, we're going to see a lot more of regulators clamping down on providers of this and making sure that people have the same protections as if their money was in a iron safe.
Understood. Well, let's go back to that zero to hero phrase. I'm wondering which companies are worthy of such a status, and whether they can.
And it's not always like that. There are some hares, but there are also some tortoises as well. LendInvest is one that I like the look of, actually, a fairly recent IPO. It's revolutionized property finance for mainly investors up to now. So that's buy-to-let investors. That's been the biggest growth product for them of late, although they started with bridging finance. And then they're actually going to start to move into specialist homeowner mortgages, which could be for self-employed people who sometimes struggle to get a mortgage, and they also do green mortgages for landlords who get better rates if, for example, the properties meet certain energy criteria. So that's interesting. But then again, you've got ones that have taken a bit of a longer time to get there. Bango, which we featured in our initial report. It was one of the pioneers of being able to pay via your mobile phone bill. So, you buy something, you get some streaming services, and that goes onto your phone bill at the end of the month. Well, they're broadening out that, they are big in this area, and it means they, again, we're coming back to data. They have huge amounts of how people buy things, what sort of people buy, what sort of content. And yes, they've got to anonymize this, but they're now actually moving from fintech into ad tech and making sure that adverts are being targeted to the most appropriate audiences. So that could be a big growth area for Bango. Also, you've got to look at companies, sometimes there's more than one company doing the same thing, and one might be a pretender to the throne. You look at the likes of Alpha FX, I think that's been a real mover and shaker in the foreign exchange arena. But then you've got newer entrants such as Argentex, who are beefing up their technology offerings and moving beyond just phone-based relationships, and the valuation disconnect between the two is really quite astonishing. You've got Alpha, which is at the time of the report was on a forward PE of 32 times, and Argentex just under 11 times. So, unless Argentex have got something horrible in the closet, you'd think there might be room for that valuation gap to close.
So you talk about disconnect there. Here we are 20 years on from the internet bubble, when there was that disconnect between company valuation and what the company actually produced, if anything at all. Are we in another bubble?
I think the bubble is popping, actually, to a certain extent. There are fintech indices around the world, and we've definitely seen the average multiples on them fall by about a third over recent months. And I think, we always think, growth is great, but you've got to be valuation sensitive as well. And I think companies trying to IPO it now, if they're greedy when they come to the market, that may, that seems great to the founders and the existing shareholders, but it doesn't mean they can always get out of that valuation. And it also means that, if they want to consolidate or invest and use the market, on a regular basis, which you should do as a listed company, if you come on at too greedy a valuation and burn shareholders, they might not be your friends for the long term.
Okay, so I'm just wondering what's happening next, because it's 7 years in the making, this research note, the evolution is evolving. So which developments are future-proofing fintech?
Yeah, I think metaverse is a buzzword that, I think everyone's got their own definition of it, but it may be that is going to start making its mark on fintech soon. And I don't have any real examples of this, but at some point I can imagine you can have avatars speaking to each other, giving each other mortgage advice, or you might be thinking, well, how do I buy some real estate in the metaverse, whatever that may mean, and there may be products that come out with that. And then, of course, will you be borrowing in cash or currency, or will you be borrowing in cryptocurrency? So there's a lot of quite abstract concepts out there at the moment that may start to solidify and turn into products. Also, I think actually one of fintech's greatest promises is to modernize the financial services in emerging markets. So, hopefully you can see, people who haven't had the good fortune to have access to savings, to credit, to health insurance and that sort of thing, start to, because people do, mobile penetration in the emerging markets has always been well ahead of the West anyway, and that would seem quite a good way to go. And there are countries like Tintra doing that. One of our clients, TMT Investments, has a investment in an African focused fintech called Verto Finance, and I think, you know, hopefully it can start to bring a bit of equality to the table.
I'm worried now. I'm thinking, will the future be an avatar of me interviewing an avatar of you? Now, we're laughing, but how likely is that? And should I be expecting my P45?
Well, who knows, but maybe we can live forever in the metaverse.
Oh dear, I'm not sure I like that either. But thank you very much indeed, Derren Nathan, Director of Research at Hybridan and author of The Evolution of Fintech. Thank you very much indeed.
You're very welcome as ever, Sarah.